Welcome to Money Minds. Have you ever wondered what an ETF is and how it works? Well, today, we're pulling the curtain back on this increasingly popular instrument. ETF, which stands for Exchange Traded Fund, is a type of investment fund that's traded on stock exchanges, just like stocks. But unlike a single stock, which gives you a stake in one company, an ETF is a bit like a basket full of different investments. It could include a variety of assets such as stocks, commodities, or bonds. The goal of an ETF is to track the performance of a specific index, like the S&P 500 or the Nasdaq. But what does that mean to an index? Well, let's say there's an index that measures the performance of the tech industry. If you were to invest in an ETF that tracks this index, you'd essentially be investing in a cross-section of the tech industry itself. This is because the ETF holds assets that mirror the composition of that index. The beauty of ETFs lies in their ability to offer diversification. They allow investors to spread their investments across a range of assets, sectors, or even countries without needing to buy each individual stock or bond. This can help to spread risk and increase the potential for returns. ETFs are also known for their affordability. They typically have lower fees than mutual funds, making them a cost-effective option for many investors. Plus, they can be bought or sold throughout the trading day at market prices, giving investors a lot of flexibility. Now, not all ETFs are created. Some focus on specific industries or sectors, while others provide exposure to global markets. The key is to choose an ETF that aligns with your investment goals and risk tolerance. So in essence, an ETF is like a basket that contains a variety of different investments. It's a tool that offers diversification, cost efficiency, and flexibility, making it a popular choice for many investors. In the following scenes, we'll delve deeper into the benefits of ETFs, the different types available, and how you can start investing in them. Now that you understand what an ETF is, you might be wondering, why would anyone choose to invest in an ETF? Well, the reasons are manifold and quite compelling. First and foremost, ETFs present an excellent opportunity for diversification. Just as the old adage goes, don't put all your eggs in one basket, diversification is a risk management strategy that mixes a wide variety of investments within a portfolio. With ETFs, investors can diversify their holdings without needing to buy individual stocks or bonds. This allows you to spread your investments across different sectors, industries, and even countries, reducing the risk associated with investing in a single stock or bond. Now let's talk about cost efficiency, another significant advantage of ETFs. Unlike mutual funds, which often come with high management fees, ETFs are known for their lower cost structure. This is because they are designed to passively track an index rather than actively managed. The result? More of your money goes towards your investment, not towards paying hefty fees, but that's not all. ETFs also offer something that many other investment options don't: flexibility. Unlike mutual funds, which can only be bought or sold at the end of the trading day, ETFs can be traded throughout the day, just like individual stocks. This means you can respond to market changes in real time, buying low and selling high if you so choose. Finally, ETFs are not limited to any specific sector or industry. There are ETFs that focus on everything from technology to healthcare, from commodities to real estate. There are even ETFs that provide exposure to markets around the globe, delivering opportunities that might otherwise be difficult for individual investors to access. In a nutshell, ETFs offer a unique blend of diversification, cost efficiency, and flexibility, making them an attractive investment option for both novice and seasoned investors. With ETFs, you get a cost-effective way to diversify your portfolio and the flexibility to buy or sell throughout the trading day. Are all ETFs the same? Not quite. There are actually several types of ETFs available in the market. Let's dive into the world of ETFs and explore their different types. Each ETF is designed with a specific investment strategy in mind, so understanding these types can help you make a more informed decision about which ETF might be right for you. First up, we have sector ETFs. These ETFs aim to provide exposure to a specific sector of the economy, like technology, healthcare, or financial services. Investing in a sector ETF allows you to invest in an entire industry without having to purchase individual company stocks. Next are commodity ETFs. These ETFs invest in physical commodities like gold, oil, or agricultural products. They offer a way to invest in these goods without the need to physically store them. Then we have bond ETFs. As the name suggests, these ETFs invest in bonds, offering a more stable investment compared to stocks. They can be a good choice for conservative investors looking for regular income. We also have international ETFs. These ETFs invest in foreign markets, providing exposure to global economies. They offer an easy way to diversify your portfolio geographically. Last but not least, we have thematic ETFs. These ETFs focus on specific themes or trends such as renewable energy, artificial intelligence, or e-commerce. They offer a unique way to invest in emerging industries or social trends, but wait, there's more. ETFs can also be divided based on their strategy. For instance, some ETFs aim to replicate the performance of a specific index. These are called index ETFs. On the other hand, actively managed ETFs have a manager making decisions about the ETF's portfolio, aiming to outperform the market. Remember, each type of ETF carries its own set of risks and rewards. It's essential to understand these before making an investment decision. Depending on your investment goals, you can choose from a wide range of ETFs. Now that you're familiar with the concept of ETFs and their benefits, how can you start investing in them? Well, the process is surprisingly straightforward. Just as you would buy individual stocks, you can purchase ETFs through a brokerage account. If you don't have a brokerage account yet, don't sweat it. Setting one up is relatively easy, and there are plenty of online platforms available to help you get started. After setting up your account, you're ready to go. Remember, ETFs trade like stocks, meaning they can be bought or sold throughout the trading day at market prices. This flexibility allows you to react to market developments in real time, unlike mutual funds that only trade at the end of the trading day. Once your brokerage account is set up, you can start researching which ETFs you'd like to invest in. ETFs come in all shapes and sizes, tracking a variety of sectors, industries, and indexes. Be sure to consider your financial goals, risk tolerance, and investment timeline before making a decision. After you've chosen an ETF, it's time to place your order. You can do this by logging into your brokerage account, looking up the ticker symbol of the ETF, and entering the number of shares you'd like to buy. It's as simple as that. But remember, while buying and selling ETFs is easy, making informed decisions about which ones to invest in requires careful thought and research. Consider seeking advice from a financial advisor or doing extensive research before making your investment decisions. And don't forget, just like with any investment, there's always a level of risk involved. The value of your ETF can go up and down, and it's possible to lose money. However, with careful planning and thoughtful investing, ETFs can be a great way to diversify your portfolio and potentially grow your wealth. Investing in ETFs is as simple as buying or selling stocks on the stock exchange. But remember, it's not just about simplicity, it's about making smart and informed investment decisions. Now, you're ready to take the next step in your investment journey. Let's recap what we've learned about ETFs. The world of investing can be complicated, but ETFs, or exchange-traded funds, are a tool that can simplify the process. They're a type of investment fund that's traded on stock exchanges, just like individual stocks. But instead of owning a share of a single company, when you buy an ETF, you're buying a basket of different assets. This could include a mix of stocks, commodities, or bonds, depending on what the ETF is designed to track. The primary aim of an ETF is to track the performance of a specific index. This means that instead of trying to outperform the market, an ETF tries to mirror it. This strategy can provide a level of stability and predictability that's appealing to many investors. One of the key benefits of ETFs is the opportunity they offer for diversification. Instead of having to research and invest in individual stocks or bonds, you can buy a single ETF and instantly own a wide range of assets. This can spread your risk and potentially smooth out the ups and downs of the market. ETFs are also known for their cost efficiency. They generally have lower fees than mutual funds, making them a cost-effective investment option for many people. And unlike mutual funds, which can only be bought or sold at the end of the trading day, ETFs can be traded throughout the day at market prices. This provides investors with additional flexibility. There are many different types of ETFs to choose from, depending on your investment goals. Some focus on specific industries or sectors, while others provide exposure to global markets. In conclusion, ETFs are a popular investment choice due to their diversification, cost efficiency, and flexibility. They offer a straightforward way to invest in a broad range of assets without needing to become an expert in each one. Thanks for watching. Don't forget to subscribe to our channel for more informative content about investing and financial planning. Alright folks, that's all for today's video on ETFs. We sincerely hope you found it informative and enlightening. It's a big world of investing out there, and we're here to help you navigate it. If you found this video helpful and would like to keep learning about investing, financial planning, and ways to secure your financial future, please consider subscribing to our channel. We regularly publish content aimed at making finance and investing more accessible and understandable. Your support helps us continue creating these resources. Before we wrap up, we'd like to take a moment to thank you for your time and your interest in financial education. We know these topics can be complex, but with the right resources and a little bit of time, we believe anyone can become a savvy investor. So, don't forget to hit that subscribe button and click the notification bell. This way, you won't miss out on any of our future videos. Once again, thanks for watching, and we're looking forward to seeing you in the next one. Until then, happy investing.